Hey folks, welcome to the Is It Bad for the Economy podcast, the podcast where we explore whether Trump's economic policies are helping, hurting, or just a load of hot air. We came up a little short on our regular episode this week, so here's the rest of that conversation, where we explore why gold and stocks are up at the same time and whether this AI bubble is real or not.
We're going to win so much, you may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time.
Speaking of things the Trump administration has not been able to execute, the shutdown keeps going, and it's not looking like it's going to let up anytime soon. Obviously, it would be disingenuous for me to try to say that the No King's Day protests were pro-shutdown protests, but if these kinds of crowds are coming out against Republicans during a multi-week shutdown, it certainly doesn't feel like patience for the shutdown is running out just yet. In terms of economic data, what's the latest on inflation, and how is the shutdown compromising our ability to figure out just exactly what's going on with inflation right now?
Oh, sure. Okay. So we don't have the September reading for consumer prices, as the people at the BLS have been furloughed stemming from the shutdown. They are bringing back some people to publish a data point. I think it might be this week, the week of October 19th, in order to comply with some Social Security deadlines. So they're going to get some number out to us. Like everybody else, we're using alternative measures now. So I'll give you a couple. So using the Cleveland Federal Reserve Bank, their nowcast implies year-over-year consumer price index inflation of 3%. And the personal consumption expenditure, the PCE, which is the Federal Reserve's preferred measure, of 2.75%. Look at some other alternatives out there, such as this proprietary one called Truflation. That implies on the spread basis that the CPI and PCE would be about the same. Remember, Kobi, that the year-over-year bottom over the last 12 months for inflation was April. Both measures, whether it's CPI or PCE, have been trending higher since. I don't think anybody wants to see the government shut down. I certainly don't. I don't have an ACA plan, right? But the people who do, as soon as open enrollment comes out and they can log in and see what the price differential is, the jig's up.
No, I think that's probably right. And especially if Thune and others are already starting to show some distance between them and Trump on the shutdown.
But not on tariffs, right, for Thune and the soybeans. Mister, I'm on the ag committee, but I can't get a deal for soybeans.
The big talking point from business news world that's starting to get a little buzz in mainstream politics is this idea that gold is up and stocks are up at the same time, and that's not supposed to be possible. Gold is what we invest in when we're scared. Stocks are what we invest in when we're getting greedy, as CNN has started to put it. It just feels like the topic we're about to get into, that this AI thing might all be a bubble and people are trying to hedge their bets, but they're so scared of leaving any money on the table. They don't want to sit down for their musical chairs game just yet. Banker Bill, is this something that you're tracking? And do you think it's a weird, mysterious bubble indicator, or is this just more hype?
Definitely something getting a lot of play in people I talk to, right? Water cooler talk. I find it interesting that demand for gold is high, while demand for speculative stocks, in particular stocks of companies that don't even have any revenue, is very high. You mentioned you buy gold because you're scared, fearful. You buy speculation when times are good. According to the IMF, much of the recent demand for gold is being driven by central banks all over the world who are buying it up, whereas the demand for these speculative stocks is driven by, hedge funds and just regular people. So do the central bankers in, say, Poland, China, Turkey, Czech Republic, all of whom, according to the IMF, are big, big buyers of gold, do they know something? What's got them so skittish? Globally, central bank holdings of gold as a percentage of all holdings are at highs not seen since the late 1990s.
You make it sound so mysterious. Isn't it just that everybody expects this bubble to pop any minute now?
I don't know. I don't know that it's related to even an equity market or stock market bubble. It could be a conflation of things. I really don't know. Again, I just find it interesting. I can't tell you why it's happening, why all these central banks are suddenly over the last year and a half. Maybe it's obvious, right? We could point to different things. But I mean, substantial buying by central banks the world over of gold, hard physical gold. These guys are holding more gold as a percentage of all reserves than they've held since the late 90s. It's a big change. Maybe central banks are simply diversifying away from the US dollar and replacing that with gold. And it's not that they are eschewing or turning their nose away from the dollar. They're still holding billions of dollars in reserves, but they are diversifying. Maybe that's it. Meanwhile, retail the world over, whether you're someone sitting at a coffee shop in Poland or in Starbucks in Brooklyn, wherever you are, you're buying crazy stocks, some of which don't even have revenues.
So gold up, stocks up, just because it's unusual, just because it's contradictory when we look at it that plainly. Somebody doesn't have to be wrong here. This could just be federal banks saying we're betting against the United States and retail investors saying we're still betting on AI.
Yes. Or central banks are skittish about something. Is there some kind of underlying pressure or stress in the financial markets that I'm blind to that's making them say, we gotta get a lot more gold? I don't know. I think the flows are changing. And there's something driving those flows, but I can't commit to any one thing in particular that I think is driving it.
And by flows, you just mean big ways in which money moves through the international economy?
Basically, the allocation of capital. I was allocating a lot of my capital into United States Treasury bills, notes, and bonds that are denominated in dollars. Now, as those are rolling off and they're maturing, I got to put that money somewhere. So I'm actually just going to buy some gold. And these central banks, Kobi, they keep buying gold even as gold is reaching inflation-adjusted all-time highs. And we've been tracking the price of gold in dollars for a long time. This isn't like, this is only something all-time high. I don't think it goes back 20, 30 years. This is 100-plus years.
It's funny. My girlfriend just happened to be looking at some historic jewelry and noticed that the cost for gold was higher than platinum.
Sure. But I'm just pointing out these things that have these revenue generating assets that have value. The price dynamics are just interesting. That's all I can say.
Well, speaking of non-revenue generating investments, a lot of fears right now about there being an AI bubble. And I think from a layman's perspective, the fear is that if it wasn't for AI, if it wasn't for all of this hype that keeps justifying more and more and more money being invested in these companies, seemingly lit on fire as they still have not managed to produce revenue streams that can justify not just the potential they want to sell, but these just billions and billions and billions of dollars that keep getting poured into these companies. The fear is that we'd be in a recession if it wasn't for this hype bubble. How is it possible that these companies are still good investments if they're not making any money? Is the stock market only doing okay because of the investment that they continue to get?
According to UBS, a bank, global AI investment is expected to be $375 billion in 2025, $500 billion globally in 2026. So that's a lot of money for things like data centers, chips, power, just to name a few things. That is driving the revenues, and for companies making profits, the earnings of certain industries, which are helping to drive, in particular, the American stock market higher, where the United States is the global leader in AI. Now, you touched on not making revenue. Yes and no. So on the one hand, let's split this up. You've got a lot of these AI companies. These are like pure AI plays. Think of your ChatGPTs, Perplexities, whatever. While many of those AI companies are making significant revenues using subscription models, they are not yet making profits. And that can go on for a long time while these companies grow and build out. And that's totally normal. And, it's fine if the companies doing this are profiting overall, such as Google or Microsoft, which have their own sub-AI shops, right? But so too is it normal that not all of these companies over time will succeed. And in fact, it's more likely that most of them will fail. No different from, say, electric cars in the 2010s, railroads in the late 1800s, dot-com companies, internet companies in the 1990s. Nonetheless, the cost to conduct AI operations is falling. And that's going to invite competition, which will make the ability to profit in this industry that much more difficult. As that cost is going down, usage is actually going to go up because it's cheaper to use this stuff. You would hope that more people are going to take it on. The uptake is going to be that much higher. That's what everyone is trying to figure out now, and why in the AI space, people are moving so fast and throwing so much money to build it out and bring it up as fast as possible.
Yeah, I think this is a question of scale. If this is just a normal case of a technology getting hot its economic sector overheating just a little bit, and then there being a revision as we figure out just how much value this new technology can generate, yeah, I think that makes a lot of sense. Have at it. That doesn't have a lot to do with me if I'm not investing in these companies right now. But the scale seems staggering, especially in a context where nothing else seems to be going right for the United States. When it comes to AI, I try really hard to listen to as many different people as possible because I feel like the teetotalers, the coders, the executives, and then the normal people finding normal ways of deploying this in their everyday life, the conversations they're having about this technology, even the verbiage they use to discuss this technology is so different. And these camps are not talking to each other. But it just feels to me that the architects, the coders, the techies are raising some serious alarm bells on the ability for these models to improve. Some people are talking about us running out of data because of just how much more you would need to get any sort of exponential lift out of these models. Some people are already complaining that there hasn't been a major level up in these models since 2023. If nothing else is going well, if we're talking about $500 billion being invested into this stuff in a year, if it doesn't work out, isn't this just going to take down the entire economy with it?
First, I wouldn't agree that nothing is going well in the United States. So for the third quarter, we've had 10 to 15% of the S&P 500 companies have actually reported. Earnings growth is 8.5% earnings growth year over year. That's really pretty good earnings growth. That's flowing through to the bottom line. Okay? That's real money that is eventually flowing through to people through dividends, capital expense. You would hope more headcount build out. But a challenge to that is what's going on with AI. So you're right. On the other hand, if $1 trillion to the global economy went puff, I don't think that would bring down necessarily the global economy either. I think it would have an outsized impact on the United States economy because, that's where a lot of this AI flow of money is being dedicated and is really concentrated. AI spend is concentrated in a subset of industries or sectors. And you're seeing that spend trickle into adjacent sectors, whether it's power, water, air conditioning, structural build out for data centers, et cetera. If there is a bubble and you're telling me that, hey, the stuff with AI and all it's hopped up to be isn't going to work out and all we're going to get out of this is, 10-year-olds who think they're now directors and can make movies, that's not good for the AI use case. I agree 100%. But you've still now built out all of this capital expense by way of data centers with air conditioners and powers and everything else. So you could still use it for something and reduce the cost of computing. Or you could knock those things down and move that giant air conditioner you put on the top of it somewhere else. If this is a bubble, it would be an industrial bubble, not a financial bubble. Industrial bubble, at least you've made something that you can use. Gold rush, okay? Everybody rushed for gold, to pan for gold. There were all sorts of picks and shovels and everything else that was sold. The gold rush, let's say it didn't work out. It was a bubble. But people still had all the picks and shovels to dig for other things and to build other things. Versus a financial bubble, which is purely speculative in what you paid for it today, someone will pay more for it tomorrow. That is pixie dust.
And I think that's reflected by some of these eye-popping stats we've seen. There was the one that went around a lot. We'd only have a GDP growth of 0.1% right now if it wasn't for these AI companies. But if you look at it, it wasn't AI companies. It was actually companies driven by data centers. So those data centers are going to be worth something, whether we use them for LLM technology or not. One thing I really do want to circle back to, though, you said that corporate revenue is
earnings, profits. Yeah.
So that corporate earnings is up for a lot of companies. It's not just these AI companies.
Earnings growth for U.S. companies, which I continue to believe are the best companies in the world, we are kicking ass. You're getting 8.5% earnings growth. That is profit. Profits are going up. People get paid by profits. New investments come from profits. You don't say, oh, I'm going to go invest and build a new factory or build a new warehouse if you're not making money to do it. It's a good thing.
And look, I don't want to discount the idea that this LLM technology could really be as good as all these executives are saying it is, that it could sort of represent species changing potential, that there's a big hockey stick moment coming. But, in my gut, and this is entirely just me making stuff up, I don't have the economic or the technological expertise to really weigh in here, but, my gut, my intuition is telling me there's something there. These executives are overhyping it way too much. It's probably not going to be this round that we figure out, that we really unlock the potential with this technology. Like .com, we really needed that second round to get that full potential from our smartphones, from social media, et cetera, et cetera, et cetera. So in that sense, it makes, even if I admit I have no idea what I'm talking about, it makes sense to me that this can't be as bad as an '08, because at the end of the day, there are going to be ashes to rise from, as opposed to there just being a big deletion on a spreadsheet.
Yeah, no, you should be skeptical, because these things haven't necessarily worked out, right? And what you said was like the internet was actually putting computers in people's pockets. I touched on the gold rush, okay? We did railroads in the late 1800s. We built more railroads than we ever could have used. That was an industrial bubble, but we still had all the railroads to get stuff into basically the original quote unquote last mile delivery, right? So your antenna should be going up.
Do you think this is a case of, okay, we're all excited about this technology, we see where it goes, or are you concerned about the scale here? Do you think that our economy is disproportionately wrapped up in this technology that does seem at least a little risky, even if you're being an optimist?
Yeah, for me, it's less so the technology per se as it is the rampant growth in adjacent industries to AI technology. For example, we're going to have AI and it's going to take so much power and we're not going to have the power to do it is a concern. So money is flowing into these speculative nuclear small reactor pure plays that are supposed to eventually be able to power these data centers and provide us with the electricity that we need. Those companies are getting all of this money thrown at them, and they have no revenues. Forget profits. They don't have anything to sell you, and yet their stocks are going to the absolute moon. So those situations, those sub-industries or nexus industries to AI, that's definitely actually what I find more concerning than, the AI use cases or hoopla itself.
On the nuclear question, I used to be sort of reluctantly pro-nuclear until
I certainly am too. I am, right? But you can't sell me that you're going to build these little reactors that are the size of however big they are, the size of a car, and that's going to power the whole United States. And you haven't even made one yet. You don't even have one to sell.
Oh, okay. Sorry. Never mind. I thought we were talking. I'd seen some plans for Microsoft to sort of buy their own smaller nuclear power plant and run it. And to me, that made me think twice. I really don't want there to be a situation where some executive at Microsoft has to go, well, we've had 3 bad quarters and it's a huge suck on our overhead. And we know that there's a moron in the White House who's going to let us get away with skimping on this.
I think that's exactly why Microsoft wouldn't wind up doing that.
And that's only driving more hype into suitcase nuclear.
Uh-huh. Exactly. Yes.
No.
Yes.
Okay.
Yes.
But to your point, that's dumb. That's silly. That is deleting money off of a spreadsheet problem, but that's much smaller than this giant AI bubble company industry that we've all talked about. I do think there's another sort of irony in there that is interesting. So if an industrial bubble is better because there are suddenly a lot of pieces that are lying around that we can build something with, doesn't that also mean that that's where we're going to experience the pain if there is a bubble that pops here? It's not
sure.
The way in which communities are going to suffer is not because there is some sort of financial investment thing that unravels. It's because all the HVAC guys lost their job.
Yes. Go back. Let's just make a simple allegory to the .com bubble. The 2001-03 .com bubble and recession that came with it mainly hit people that were in the upper income brackets because they were the ones invested in all these shitty companies, for lack of a better word. Right now, you have much more participation in the stock market across income demographics, not just in the top 20%. And what little money that lower income quintiles have in the stock market, sure, if this doesn't work out, they're going to take a hit too. And you would hope that hit doesn't start to feed on itself and ultimately cause a recession. That is a risk.
Well, this last part I want to get into a little bit is this circular investing. Banker Bill, do I have it right that there's kind of 3 companies that are really driving this sector? There's the ChatGPTs, the LLM-only companies that are supposed to be on the cutting edge. There's the hardware companies, the NVIDIAs, who are producing the technology, the hardware that's actually going to be able to achieve these results. And then you have these sort of in-between companies, the Googles, the Microsofts, where they're putting a lot of money into their AI division, but they still have completely profitable, stable parts of their business doing lots of things completely unrelated to AI. It feels like they're starting to move a lot of money between the three of them. And this just doesn't feel like it's classic market-driven, profit-driven, greed is good capitalism where people are making bets and they're winners and losers. Isn't this just creative financing, or is there any sort of substance here?
It's certainly creative. Let's go through a practical example to try to make it understandable. A few weeks ago, NVIDIA, which is a chip maker, they agreed to invest $100 billion in OpenAI to help finance OpenAI's own data center build out. That would be so big, the power it would take would power a major city. OpenAI, in turn, committed to filling those data centers with millions and millions of NVIDIA chips. Okay. Now, 2 weeks ago, so a week after that initial announcement, OpenAI struck a similar deal with NVIDIA's rival, AMD, Advanced Micro Devices, to deploy tens of billions of dollars worth of AMD's chips. As part of that tie-up, OpenAI is poised to become one of AMD's largest shareholders, I believe, because of the involvement of equity warrants, which is a fancy way of saying that OpenAI is going to own shares of AMD in the future, but not today. So there's all these commitments.
They're trading draft picks?
Yes. This is where now look.
We need to stop letting you guys make new stuff up.
Equity warrants have been around for a very long time.
Yeah, I'm
and
sure.
they are a good way of tying up incentives for, let's say, venture debt companies, venture capital kind of firms, right? To supply capital today and get some kind of benefit tomorrow. That doesn't mean the example I'm walking you through now isn't sketchy, okay? Right. So there's all these commitments for technology that is largely unproven as a profitable business, all right? And so OpenAI is making all these commitments, but they don't have the cash for the build out that they need today. They don't have the money to do it. They had been using Microsoft, but now the numbers for their scale, which you touched on, are getting so big that in 2 to 3 years, they're going to need multiples of more capacity than they have now. And Microsoft, big bad Microsoft, can't meet that demand. So they're making these new deals with these other companies, right? But OpenAI, again, does not have the money to pay for this stuff today. So there's complicated structures on slides. There's pages showing money flowing in a cycle to different firms, basically buying, selling to themselves or each other. And in my profession, look, this raises fundamental red flags in counterparty risk and fraud risk, right? I've read about some of the commitments in these kind of circular agreements, and they don't have the money to meet the commitments today. Some of this is being done with the warrant agreements I touched on. Some of it's being done with stock, which adds more layers of complexity. So to put a bow on it, there's two things that are important to make this work, for this to be successful. One, demand for AI better be strong. And two, that the companies engaging in these complex agreements produce detailed accounting and disclosures concerning the tie-up. On number two, OpenAI is a private company. They are therefore not required to disclose to you or me or anybody else anything.
Meanwhile, the Trump administration is floating the idea of making companies less transparent by getting rid of quarterly earnings reports.
Neither here nor there, but yes. So look, it's sketchy. It works if the demand remains strong. Where these things have fallen apart before, someone's committing fraud in the agreement. One of the parties is committing fraud. One of the parties doesn't have the demand they thought, can't meet a commitment. I told you I'd give you 1 million chips. I can't. That creates a waterfall effect where because the chips weren't delivered on time, demand fell, couldn't meet my obligations, revenue falls, can't make a payment, yada, yada, right? You see how this goes. I mean, right? It gets risky.
It feels like they're doubling down, adding parlays, just a little bit to my ears, it's starting to sound a little big shorty.
I could see how that would be, yes, because they are making investments today and they are making commitments today based on, and you've eloquently put this, numbers on a spreadsheet that they think are going to materialize in 2 or 3 years.
Is this short-term stability in exchange for long-term risk?
No, I think it's the other way. I think it's short-term, high financial risk for the prospect of being the absolute unequivocal top dog in AI if this works out. So it's very high or potentially very high short-term financial risk for long-term monopoly, basically. No one can catch them.
The fact that this could turn into a long-term monopoly, I understand how that's the pot at the end of the rainbow here. That's how Silicon Valley has operated for decades, and I think we're all becoming frustrated with it. But the way that you're phrasing that doesn't make any sense to me, because to me what this sounds like is that all this circular investing is allowing for these companies to have much more solid books in the short term. Look at all this cash we have. Look at all of this equity that we have in all of these high-value companies. And the risk is that if one domino falls, all of a sudden there's fallout across all the major players in the space. And all of a sudden the entire USAI economy suffers, not just 1 or 2 players, or there aren't necessarily winners to go along with the losers. What am I sort of not getting right in that debate?
Does it help? Yeah. Does it help if I add to what you said about, oh, we have all this cash and equity up front today? Does it help you if I tell you that money's already spoken for to build out capital expenditure, right? To build out these data centers and whatnot that are going to generate revenue?
Oh, so you're saying that money's essentially being bet the second it comes in because...
Yes, for stuff that's going to make more money in the future. Yes.
Got it.
You're going to give me all this money today so that I can fill a warehouse or a data center with chips. And if it hits, God help anybody who tries to come after us. And this is not saying like there wouldn't be U.S. competitors. There would be. Like this is a global thing. If this works out, I mean, look, I'm not an expert in this, but I would go so far to say like the Chinese would be laps behind if this works out, and they're kind of number 2 in this right now, right? So like that's where they're trying to swim to. That's their swim lane.
Got it. So the incentive makes sense to me. But then, yeah, look, this sounds icky to me in the sense that isn't this what we've been complaining about with the Russian economy, where the oligarchs are all sort of intertwined in all these corrupt dealings?
I think this is pretty clean. Look, this is very complicated. Don't get me wrong. But we know all this. They're disclosing it. Some of the stuff that we're getting disclosed to us, they're not even required to disclose. All of this, at least to this point, is being above board. They are, however, creating structures that have shown before have a high propensity for counterparty risk, which means A cannot meet the commitments to B, which means B cannot meet the commitments to C, and the whole thing falls apart, or someone A, B, or C commits fraud. But right now, this is all above board. That's a good thing, right? The oligarch that you kind of just pointed to with the Russians, backroom deals where nobody knows what's going on, doesn't really what happen. Not really what's showing what happens here. They're disclosing a lot of stuff to us. Yeah, I can criticize what they're doing because of what they're disclosing. That's a good thing.
Yeah, but that's
all I want to say.
Yeah, but isn't this how that ends?
Potentially.
Because all of a sudden the incentives there, the means are there, and then within the larger regulatory context.
Sure, potentially. I mean that's why this is related, but we're not talking about Meta. But this is why Mark Zuckerberg is saying I'd rather lose tens of billions of dollars of profits at Meta than be wrong on AI, because he sees the writing on the wall. If this works and you are not a top 5 or 10 player in it, you're toast.
We talked a lot about patience with the shutdown. How much more economic patience do you think there is with these AI companies before one of them goes down, before one of these investments turns bad, before we do see the need to cut some of the rot off and try again?
No, it's a great question. I think everybody wants the answer to that, and we don't know yet. The latest development from, I think it's OpenAI, of making the fake videos, right? And you can make, maybe I shouldn't say fake, but completely computer generated content of a video where our entire lives, if something was recorded for as long as recording has been around, if you saw something recorded, you knew it was real, and now it's not. That takes a lot of compute to be able to make those things. Is that going to make money? Because if not, then no, the thing falls apart. You're right.
Well, I think a big criticism of that feed has been, wait, you're just turning this into another social media platform so you can sell ads again?
Yes, that's a good point. That is a criticism. And I think that criticism has a potential to creatively destroy social media as we know it today, right? Because Instagram basically usurped Facebook, which Facebook, now Meta, acquired. And now TikTok has basically usurped Instagram. And so do fake AI videos that make people laugh because Mr. Rogers is talking to Eazy-E result in less viewership to TikTok? Don't know, maybe. And if so, does that new now social media app warrant all of this capital investment that we made into AI? Probably not.
That's probably a great place to leave it. Thank you so much again for joining us, whether you're joining us from YouTube, TikTok, Spotify, Apple. Thank you so much. And yeah, please help us keep growing it. Please share it with your family and friends. Please leave us that 5-star review. We're so happy to have you again.
You may even get tired of winning.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. It takes a little time